Welcome to the President and CEO podcast series, where every 2 weeks, President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. In this edition, we speak with Tom McGee, National Managing Partner for Deloitte Growth Enterprise Services, about the current and future prospects for middle market companies.
So Tom, maybe we could start by you telling us something about Deloitte Growth Enterprise Services.
Sure. Paul, Deloitte Growth Enterprise Services is Deloitte's private company and mid-market practice. And we generally define the mid-market as companies between $50 million to $1 billion in revenue. They're a huge part of the American economy. They're about 50% of our client base. And we've understand from our clients that they really, expect the same types of things that all clients expect from Deloitte: deep technical experience, industry expertise, but they value a more personal service delivery approach. So we have resources throughout the United States at every one of our offices that are focused upon serving companies in this space and really have a deep experience and understanding of the unique needs and risks of companies that operate in the mid-market.
Can you give us some insight as to why you picked that range and why those cutoffs are important, if in fact they are?
Paul, as you mentioned, there obviously are lots of different definitions of the mid-market. As we looked at it, the companies between $50 million to $1 billion seem to have a lot of the same characteristics. Although it is a wide spectrum, generally companies in that space, in that size range, were predominantly private, although there are public companies, and other characteristics that they shared similarly. It was also, I think, many of the other participants in the middle market generally seem to have a similar definition of that $50 million to $1 billion. I think what's interesting isn't just the definition, it's also the importance of that market segment to the American economy. Companies in that size range have aggregate revenue of about $6.1 trillion, which is equal to about 40% of U.S. GDP, employ 25 million people, which is more than the entirety of the companies that comprise the S&P 500. So it's a huge part of the American economy. I mean, we've kind of called it the engine of the American economy. Understanding that market segment, understanding what their viewpoints are, their perspectives of the future is incredibly important to understanding the American economy, and obviously understanding our client base, because 50% of our clients are in that market segment. And what was surprising to me was, as we began to do this research, was how little research there was done on that market segment. And so, in addition to helping us serve our clients, we also feel like the research is really helping understand the trends in the broader American economy, somewhat serving as a barometer around its direction.
You have a lot of interaction with middle market executives, I know. You do surveys and have published a lot of interesting data recently. In October, there was a survey that suggested that middle market CEOs have somewhat lessened in their optimism in terms of long-term growth prospects.
Yeah.
Is that still what you're hearing, or is there any kind of uptick in terms of optimism?
What you're referencing is a survey we did in October, as you mentioned, and we surveyed about 700 mid-market executives. And at that period of time, there had been really a dip in optimism from an April survey that we did to October. And what we found was that companies in the space were really operating under a kind of a cloud of uncertainty, given the broader trends that we're all aware of in the economy, the situation in Europe, the downgrade of the U.S. debt. I think recently, I would say companies have become a little bit more optimistic. I think I will say cautiously optimistic, but that cloud of uncertainty still does exist, right? The situation in Europe is still ever present. There's still uncertainty in the broader U.S. economy. I think there's concerns about clarity of the tax code and obviously the election on the forefront and what will come of that. So I think although I would say that mid-market executives have become cautiously optimistic, I wouldn't overstate it. I still think that cloud of uncertainty still exists. And until that uncertainty becomes much more clearer, and there's more certainty over the future, I think that we'll still have that level of caution that exists.
In your experience, do mid-market companies have a little bit more resiliency, or perhaps are a little bit less exposed to these types of uncertainties relative to their larger or smaller companies?
I think, first of all, when you think about the events of the last couple of years, the financial crisis, et cetera, mid-market companies have done a really good job of navigating themselves through this crisis. There was a tremendous focus upon balance sheet health, And companies have really done a good job, generally speaking, of positioning themselves to achieve growth in a really difficult economic environment. But, you know, mid-market companies, this is still predominantly a U.S.-centric marketplace. And what I mean by that is that the vast majority of their revenues and employees are still domiciled in the U.S. And so what happens in the United States and the health of the American economy, outlook of the American economy and so forth has so much impact upon the mid-market. That said, companies are clearly, you know, the expectation is for them to become much more global. But I think that what happens within the United States, tax policy, regulatory policy, has a pretty profound impact upon the mid-market.
You mentioned that it's a primarily domestic-focused marketplace. I've seen some things recently coming out that suggest that at least a reasonable chunk of the middle market is beginning to really look global, look overseas. I mean, is that kind of what you're seeing as well?
Yeah, I am. I think mid-market companies are beginning to really look global, and not just from the standpoint of looking to move production operations offshore, but really looking at global opportunities for growth. New markets, whether they're emerging markets or more mature markets, really moving with customers, looking for revenue opportunities. So I absolutely believe that mid-market companies are looking global. Today, they're not as global as some of their, you know, multinational colleagues might be, but the future would certainly become, we would see more mid-market companies going global for sure.
Are there any particular sectors within the middle market that seem to have more of an affinity to the global reach?
I don't know that I would say a particular sector is necessarily more likely to go global. I would say as they become larger, they tend to look for global opportunities. And so, you know, although 50 million to $1 billion might seem like a fairly finite, you know, size range, there's actually a lot of diversity and differences between a company that's 50 million to $1 billion. So as you move up the size spectrum, companies that are larger tend to look global for growth opportunities.
You had made reference to, of course, Europe, to the regulatory environment. What do you see as today, sort of what are the major challenges being faced by mid-market CEOs? I mean, is the fiscal issue, taxation, regulation, all of the above?
I think it's probably all of the above, and I really do think this term of uncertainty is really the operative term. I think to some extent, I mean, there are obviously some long-term challenges that, you know, we all face as American citizens and the American economy is facing. And I think that lack of clarity around some of the solutions around that are impacting mid-market executives.
I know that private equity is a large part of your business. We've had some conflicting judgments as to what's going to happen in the middle market with respect to investment in M&A in the next 12 to 18 months. Some people think that it's going to have a very large ramp up. Other people are saying that the uncertainty I think you've been referring to is going to have kind of a dampening effect on the level of activity. What's your perspective on that, being on the ground?
I do think that uncertainty, you know, has a broad impact, whether it's in private equity or just business in general. But, you know, there is a tremendous amount of private equity uninvested in the United States today. I think the most recent estimates are something like $400 billion of uninvested private equity. You know, it is difficult to get some of the large mega deals done today with constraints upon financing. So we are seeing, you know, private equity clearly moving into the middle market and being active in the middle market. And as a percentage of deals done, some of the recent data would suggest that, you know, the mid-market deals are becoming a larger percentage of private equity transactions. So private equity has always been, I think, a big player in the mid-market. I would expect that to continue. As it relates to the broader M&A market and how active that'll be, I think a lot of that comes down to, you know, what happens in the broader economy.
Obviously, to have an M&A, a reasonably hot M&A marketplace, you're going to need financing, access to finance, and just obviously for running a business and growing a business, you need a strong financial marketplace. Has the middle market, in your mind, sort of cleaned itself up and strengthened its balance sheet sufficiently to have access to that kind of capital, particularly with the uncertainty of the banking system in Europe, and how that impacts the U.S.?
Our October survey, and actually even our April report as well, had indicated that mid-market companies had really, you know, focused pretty significantly on improving balance sheet health. And I think if you compare what their expectations were in April and in October versus, you know, a few years prior to that, they clearly have improved the strength of their balance sheet. So as it relates to the broader financing marketplace, when we asked a number of questions around what did they believe were impediments to growth, surprisingly, financing wasn't one of the top items listed. Really uncertainty again, concern about the fiscal health of our country, debt levels in general in the broader marketplace were concerns, but their access to capital and financing wasn't on the top of their list as one of the concerns.
We started President and CEO for the simple reason that you basically have identified, and that this enormous and very powerful marketplace has been invisible for a very long time. And I was wondering, do you foresee any sense of advocacy arising out of this reasonably new devotion to the middle market in terms of what you at Deloitte have been doing, in terms of the efforts of GE Capital and the Fisher School at Ohio State, and in really beginning to focus on middle market issues? Do you see any sort of advocacy arising from that?
I do see a much greater level of interest starting to be generated in the marketplace. You mentioned a number of them. GE's focus, CNBC has recently done a number of features around the middle market, our efforts, your efforts, et cetera. So I think we're starting to shine a bright light on how important this market segment is to, as I mentioned, the American economy, job creation, and innovation. I don't know whether that'll translate into advocacy. I think a lot of companies also relate to the industry segments that they operate in. But I do think companies appreciate having that light shined upon this market segment, and really understanding what their peers and others in this similar size segment are thinking, how they're operating, what they're focused on. One of the things that we found in our most recent report, and not surprisingly, is companies in this space are really focused upon productivity, really enhancing the level of productivity in a very difficult economic environment. And that that focus and sharing that feedback, I really believe, has resonated with the broader marketplace, with our clients and other companies that we interact with, understanding that they're not the only ones that focused on that, others are focused on. And really, despite the fact that they're focused on productivity, a lot of focus still on investment. Investing in positioning themselves to grow, investing to continue to improve productivity, investing in technology to position themselves for the future. So I think sharing those types of information in the broader marketplace, I think, has been very well received and probably overdue.
Very much so. Well, Tom, thank you very much.
Thank you.
I appreciate it.
Yeah, pleasure to be with you.
Next up in our series is a discussion with David Lonsdale, President and Managing Director for Allegiance Capital Corporation. Thanks for watching.